Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. Recently, I've become fully sure that every fiat bank in the world will want to hold Bitcoin and sell it. They might want to become agents for their own clients. You know a lot about banks. I think you wrote a great, albeit lengthy, report on Bitcoin banking and how you see things developing from there. Recently, we've seen big banks wanting to get into Bitcoin custody. They had SAB 121 and were actually advocating. They were writing letters to the Treasury and other regulators basically saying, or the SEC, and other officials saying, hey, we want this rule makes no sense. We'd like to hold Bitcoin for our clients. Now, I think the SEC has given in and let some banks get around the rule. Of course, it looks like the big banks will soon be able to hold Bitcoin for their customers. How do you think that will go? Did you think this would happen? Also, what does it mean that these big banks are now holding Bitcoin? So I guess a lot of what I've written about this subject has been much more theoretical and perspective. I don't think my opinion would be very useful to people who are only watching it from a regulatory point of view. But from a custodial point of view, I think the most interesting thing would be to see how big the shared custodial market can get over time. I believe we are only beginning to scratch the surface of what that might be. It's fine to get the licenses and do everything else that's needed to set up that intrabank scheme. In general, though, I think there are a lot of really cool uses that can sprout up. When you look at what you can do with Bitcoin and how the current financial system works, I think you'll find a lot of very new uses that either didn't exist before or would be very expensive to implement in the current system. Making some kind of shared custody plan in the world of TrapFire is like making an escrow deal or a trust structure. A lot of these things are also very pricey. And Bitcoin really speeds that up, and you can use it to set up these automatic forms of shared custodial models. As self-custodial or shared custodial solutions become more popular and grow, which I think they will, there is still a big gap in the market, even though it's there in a big way already. I could see new community-based, organizational, or legal structures being used in that area, but they aren't being used yet because Bitcoin is still being accepted. But I think that's all I need to say about it. Yes, I'm always interested in situations where Bitcoin can do something that cash can't because of the way it works. That's always been an interesting area for me. I had an answer for that too, Sam. By the way, I just recently realized this. I felt kind of bad about putting this together because I should have done it maybe 5 or more years ago. And to be clear, I've only recently become fully sure that not only will eventually, I don't know what time frame. It could be a year, 10 or 20 years. While it may not be 100% certain right now, I think that as time goes on, it becomes more and more likely that every cash bank in the world will want to hold Bitcoin and also try to sell it. They might want to become agents for their own clients. Because as I said, I'm embarrassed that I didn't think of this earlier. The whole fiat banking scheme is based on the grave injustice of being able to print money, which is something we all know. But to get into the details of why this is, well, partly how it works and partly why it's so bad. Commercial banks giving out loans is how almost all paper money comes into being. Most of the time, they will always try to get real assets from the client as security for the loan. After that, they set the interest rate on loans based on the LTV and the general creditworthiness of the client, which could be their own creditworthiness or the creditworthiness of the business. This is done to try to balance all the risks involved. But since they can print as much money as they want, it's not really a market, is it? They can just print paper money until it disappears, which is what they do. And this is pretty much Ender's game, right? This is how it works. It will never end. And finally, you get this train can't be stopped with all of that in mind. I think they'll understand that Bitcoin is by far the best thing they can use as collateral for these loans, which you may have brought up in a previous question. That's also a nice way to return to it. They can make it much more possible that their credit counterparties even have Bitcoin by selling it to them in the first place. However, there's no reason to think that happens. When banks get this, they get the next thing. They sell as much Bitcoin as they can to as many people as they can. Then they print money and lend it to them for just about anything. At that point, it doesn't matter because if you're following the now very well-known, I think originally Unchained. I'm not sure if I should do it or not. Credit, or at least Unchained, made it very well-known and popular, like massively over-collateralized. Because of this, it's pretty much risk-free for everyone, right? I don't want to say it's totally risk-free, but kind of. To say, yeah, that can be used in a lot of different ways. It's not necessary for us to talk about it, but my point is that fiat business banks will start to offer this just because they can. Back it up with Bitcoin and hope the customer doesn't pay back the loan. Because there is still a small amount of risk in most cases. I was joking when I said it wasn't like a real market a minute or two ago. It's kind of a real. The bank can still lose money, which is the worst thing that could happen. This is why there is some regulation. There is a good chance that they will end up with less money than they hope for if a loan goes bad and they have to go take back a house or something very valuable. Perhaps not at first, since they did just print the money, but there are better and worse results. I also think that from the bank's point of view, erasing all of the customers' Bitcoin so that it can be immediately reclaimed is brilliant, since it's by far the cheapest way for the banks to buy Bitcoin in the long run. You could just buy it for them if they don't want to. But why buy Bitcoin when you can print money, lend it to someone, make sure they have the Bitcoin you sold them, hope they fail, and then take their Bitcoin? This just recently came to my mind. I think it will happen to every cash bank at some point. They will also need to sell Bitcoin to their customers in order to speed up the process of getting more Bitcoin. That's my thesis as of, I don't know how many weeks ago. Yes. Eric, do you have anything else to say? Yes, I agree. That definitely seems like it would be a very appealing reward. When you list all the different things that make something good, you get collateral. In many of them, Bitcoin is better. And that's just one example. I think that story will spread to banks as well over time. So could you quickly explain why it's the best collateral? Well, I think what's really interesting is that you can make or get rid of the rehypothecation risk depending on how you set it up. At this point, it's something that can be easily sold. As long as we don't stray too far from the subject at hand, I believe that when people argue that the dollar will fail and be replaced by something else, it will be the yuan, Bitcoin, or something else. The main thing about the dollar is that its capital markets are the deepest and most open in the world. There is a huge network effect going on there that is hard to stop. I also believe that gold is very deep and liquid. They could be pricey and have a lot of contact. There is a lot of funding, but it costs a lot to do business, and how they compare to other investments. The amount of money that can be used to buy things has grown very quickly over the past 15 years, and that will continue to happen with Bitcoin. I also believe that when you look at some of Bitcoin's features, like rehypothecation, liquidity, trustlessness, and an unchangeable supply, along with the many other things that people talk about all the time, these are the things that really stand out. But it can be made so that a lender knows they can safely make a margin call on that Bitcoin, that there will be enough liquidity in the capital markets for Bitcoin at that time, and that collateral is following an unchangeable supply schedule. I'm excited. I'm excited to see how those goods grow over time. That has grown some over the last 5 years, but not nearly as much as I think it will. Bitcoin as collateral, perfect collateral for loans. And I believe these banks will understand that.